Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Monday, the 23rd of November. Starting off with Advanced Energy, where sort of slowly and quietly creeping higher here. The positives are basically the way that November support around the 0.2 area was previous resistance, so that's normally seen in bullish situations. We've got quite a sharply rising 50-day line at 0.25. And at least while we're above that 0.25 zone, the initial November resistance, we could see a move towards 0.4 pence, hopefully by the end of the year. At this stage, only obviously back below 0.2, really killing the idea of a bullish move here, but it looks as though the shares are on their way. Concepta is the next contender, and here we've had a classic falling wedge break, or I suppose almost like a falling trend channel break. That's from May there on the daily chart. So breaking October, November resistance around a penny. Like to see the shares close above a penny and remain above the 50-day moving average at 0.91. If they do that, the best case scenario target here is up towards that resistance line there from January, the top of the triangle formation that I've managed to draw there near to 2.2 pence, hopefully over the next 1 to 2 months, maybe taking us to the end of January. If you're cautious on the shares, maybe wait for an end of day or a weekly close above the 200-day line at 1.15, but it looks like enough work has been done here to get this off the ground, especially after those early October bear traps below 0.8 pence, which sort of flushed out the weak hands. Going on to EQTEC, which seems to be in demand today, at least in terms of people asking me to cover the stock. Here we've got a break of the June resistance line there. It's a triangle there from June. Let's call it through the 50-day moving average level, 0.51. End of day close and a weekly close above that, hopefully at the end of this week, should give us enough momentum this time after all the dilly-dallying since July up towards the top of the rising June trend channel at 1 pence, hopefully over the next 1 to 2 months. The stop loss there back below the support zone of last week, and that uptrend line from June around the 0.46, 0.45 level. But one would hope now that the shares remain the right side of the 0.5 pence level. Announcement today from Galileo, still waiting for the end of day close above 1 pence, which we haven't quite achieved yet. Rising trend channel on the daily chart from the end of March, pointing to around 1.5 pence, and that upside valid while we hold above the 50-day moving average and the March uptrend line at 0.8 pence. So waiting for that 1 pence plus trigger on Galileo. Good to see Petrel Resources back on the scene. Here we've got the shares breaking a falling wedge from August. It's interesting that lots of I suppose with the oil price and now improving on vaccine news, we're getting the oilers back in favour. Final sort of bear trap for the shares back below 3.2 pence today, and breaking that line of resistance from August, 3.44 pence with the 20-day moving average as well, hopefully up towards the 200-day line now at just under 5 pence. So the big target here over the next 1 to 2 months up to the top of that broadening triangle from June, heading towards 8 pence. So let's see if that particular situation takes off. Another new name, at least in the near term, is the following stock, RTC Group, where we've had a rather strong looking candle. The key here is really breaking that 38 pence level, which is a line of resistance and sort of the top of the wedge from April, above 38 pence, looking for a March resistance line projection target as high as 60 pence, hopefully by the end of next month. The weekly close above the 200-day line would be nice on Friday later this week. Onto a stock which I was sort of chuckled to myself, thinking that Shoe Zone could be a fantastic situation, but actually these situations is normally a bad thing to do. You should always take every situation seriously. Here we've had a bear trap gap reversal, so the gap down in October, and then a further minor new low there for November, and then straight back up again. In fact, the breakout, I suppose, really was on on Wednesday, Thursday last week. Friday we had a nice close above the 50-day line at 43 pence. And the view is that while we're above that 50-day line, we could see the shares head up towards that March resistance line projection, the top of the triangle there, the 2020 triangle, up to £1.20. Ideally, there's no break back below 51 pence, which was the late September peak for the shares. So let's see if they can hold that area, but that might be slightly ambitious. Probably the 50-day line, 43 pence, really the best stop loss at the moment. Onto a stock where the bears try to hack into the situation, or at least sabotage the situation a little bit over the weekend. Interesting situation now on the technical side, that we've had now basically 4 days of support coming in at or just below the 2.5 pence level. While we're above that, really still looking for a break to the upside to retrace the decline back from earlier in the month. Still looking for 4 to 4.5 pence. If you're looking for a buy trigger, a technical buy trigger that is, then it would be an end of day close above the 20-day moving average at 2.96 pence. Stop loss at this stage, I suppose the best one really would be an end of day close back below the 30-day moving average, currently at 2.25 pence. But one wouldn't expect lasting price action now below 2.5 given the multiple bounces at that level. We managed to bounce, obviously, the other week with just 2 bounces on the 50-day line. So the 4 at 2.5 looks pretty strong at this stage. Onto a stock which was covered, I think, quite recently, but nice little break there of the late October resistance line around the 0.42 level. While we're above that on an end-of-day close, looking for a best-case scenario target for tissue Regenix as high as 0.75 or 0.8 pence over the next 1 to 2 months. Probably the best stop loss here at this stage is actually just the 50-day line, currently at 0.37 as a trailing stop loss on a technical basis. Xpediator is the next stock that we're looking at today, and here we've had a gap through basically the initial November resistance, so a gap through 26 pence. While we're above 26 pence, looking for a March resistance line projection as high as 45 to 47 pence over the next 1 to 2 months, so maybe call that by the end of January. Finishing off with the works, and here we've got looks like a V-shaped bull flag developing here. We had the breakout last week, come back to test the 200-day line and the broken resistance line from April as new support. So while we're above 24 pence on an end-of-day close basis, looking for 45 pence at that April resistance line projection. Let's see if that particular situation works. That's it for me today. More updates tomorrow.